top-down market analysis or review. So I like to always start out with what I call the macro, the big long-term trend. And to do that, I like to use the monthly time frame. So this is the S&P 500 SPX. So you can see how clear the trend is currently, pushing down. We've got a kind of descending trend line. It's been in that kind of trend line channel. You can see it came up to almost touch it to the penny on last week on Friday, I guess, or Thursday. And the macro trend, the way I look at it, is based on, a lot of times I'm looking at the momentum to give me definite trend direction. And so if you look here at the macro monthly, which I call monthly macro, our momentum indicators, which measure price movement up or down, are down. Okay, so those are still down. Now, if you go back over in history and you look back at 2000, those periods where we had the big sell-off to 2003, these momentum indicators stayed down the whole time on the macro and then finally turned up. Same for 2008. So if we have time, I can go back there and show you. So right now, the macro trend is still up. But within any trend, though, the markets will cycle up and down. But the macro trend is down, and then we have that big movement back to the upside, cycling a kind of, you can call it a bear market rally, then this macro downtrend. So the next time frame down would be looking at the weekly, which I refer to as a long term. So here you can see that clarity. You can see the trend line again coming in here, and you can see this, key moving averages. This is a 50 simple moving average on the weekly, and all the moving averages, the big ones, are still sloped down. So that's another thing that shows you trend. When the moving averages are still trending down on their bigger ones, the trend is still down. So you can see that 50 is still sloped down. It's color coded, so when it goes sloping down, it turns red. Now you can see it came up and almost touched to the penny, that descending trend line. We've got a cycle 1 and 2 were up, and you see this was a fantastic kind of swing weekly long-term trend trade back up from that low back in June. Then we got that massive rally to the upside that lasted about 40 days. And that's, if you go back and look at bear market rallies, they tend to, I think, I was looking at some statistics about average about 36 days, sometimes, and up maybe 17%. And this one was, about 40 days and up about 17. So you can see the momentum is starting to shift down on the weekly, but it's kind of peaked out. And then I like to look to the medium term, the next time frame down, the daily, and you can see here's that trend line. Here's your 200-day moving average, and it did almost hit it to the penny right there on that day, and then just wavered sideways. Then we finally got a little bit of a crack on Friday, and you can see momentum is starting to shift down. Cycle 1, which is a momentum indicator, is starting to break down. So we'll see if there's more downside movement, but typically, if you get this, there's usually that at least maybe a check back to this 20-21 period moving average, that dashed yellow line. So that's kind of currently what we're looking at there if you look at the top down.